Welcome back, and let's carry on with some requests. The next one is Target Hospitality Group. We had a beautiful rally here from about $3 all the way up to $7. But for me at the moment, I'm a little bit worried about this. Maybe I can just show you here. There is some nice support here, but this chart is working to test the support. And the support is exactly on this line of $5.70. And for me, it's either a possible irregular double top here, or maybe it can be a left shoulder, a head, and maybe a right shoulder forming. But for me, the crucial is this 580 level. If it breaks below that, let's call that a head and shoulder formation. Now, by the way, why do we call it a head and shoulder or a double top? Because both of them are warning formations. If it breaks below that 5.8 level, it can come under pressure, and it can maybe take the share all the way down to $3.80. And where will I be happy again? It can only go up above $6.90. Just keep in mind that the markets had in the last 10 days beautiful rallies. Some investors and analysts say that it's maybe a month-end sort of buy. I cannot say that it is, but for me, a lot of these shares had beautiful rallies, and maybe they pull back. Or investors can say, listen, we look through the inflation cycle. We're not worried about that. We're not worried about the rising interest rates. We maybe got a year or a 2-year view. That's why we're buying these companies and we're holding on to it. By the way, you'll never know. We just see that we've seen some strong moves into the S&P 500 the last week, even with the top 40 local market. We'll have to see. Our market unfortunately still below its 40-week moving average, and for me that will be negative while we below that. Let us look at JDcom. Interesting, because what happened was the executive of Naspers and Prosus, they said that they selling their JDcom shares. I don't know if they've sold everything. They selling that, and they starting to sell also 10-cent shares to buy Naspers and Prosus. Well, both of that is all positive for Naspers and Prosus. For me, if I look at this chart, the only place that maybe they offloaded these stocks was around March. They sold it down with the rest of the market when the Nasdaq was under pressure. I don't know, but if I look at this chart, suddenly I say maybe the Naspers share is also picking up, and the Prosus shares are looking good, but the JD.com share is also not looking too shabby. And for me personally, if it breaks above the 65.60 level, I mean, then we can maybe see a beautiful move to the upside. You can actually say to yourself, listen, this is a strong overhead resistance line. There is maybe a possibility of an inverse head and shoulder, but I would love to see this neckline of this candle, of this shoulder, right at that neckline. Beautiful high, low. There's a low. There's a higher low, higher low, higher low, higher low. That is all positive. That tells you that we can maybe see a beautiful break to the upside. And by the way, if you combine these lines and you just look at that, then what do you see? You see it's a beautiful rising triangle that will usually be a bullish breakout to the top. And where can it go to? I mean, if you missed out on Naspers, maybe it's time now to look at JD.com. And there's your level. If I look at that, I maybe just, you are. It can maybe, if it breaks above that level, this beautiful resistance line here, it can maybe go to 83.25. But where will my stop loss be? My stop loss will be at 58.65. Below 58.65, unfortunately, we can move back in this triangle, and it can maybe cause some selling. But very interesting chart, because if the Naspers executive is buying their own shares back, in actual fact, they said they've got an open book to buy Naspers and Prosus. So they're serious to unlock maybe that value or that discount that everybody was talking for so long. But I don't know, but the JD.com share price does not look too bad at all for me. So maybe there's a chance here as well to get into that. Let us look at Crange International, listed on the Nasdaq daily chart. And I like this kind of charts if I see this. I mean, from the top, you can see all lower highs. Suddenly, what do I see? I see that the share is trying to find its feet. There's the big trend line that tells you that it's still very negative. But you're right at the bottom. What do I see? I see a low. I see maybe a higher low. But for me, what is important is that it needs to break above 63 American cents. If it breaks above 63 American cents, we can maybe see a beautiful rally here, because if you combine this line as well, you see there is a falling wedge structure. Now, a falling wedge usually is a positive. So if it breaks above that, it can maybe go all the way back to 78 cents. But I will say use that stop loss of 51 to protect your capital, and then you know that you play safe and you don't burn your fingers. Always remember, that's quite important. If you see a share chart like this and you are nervous, it's even with that Rand Merchant Holdings that I showed you earlier on. If you see a share just drop off the charts and you want to buy it, don't go in and buy the whole lot. Let's say you want to spend 10,000 Rand. Don't go and buy 10,000 Rand at one time. Buy maybe 500 Rands or 800 Rands worth. You don't need to go and buy the whole lot, because if you're wrong, then what do? You need to take a stop loss. You wipe out your capital and you burn your fingers. Rather than buy a little bit, if that line's break, it can maybe come back a little bit. Mr. David Shapiro always says something, and I like that. He says, if you see a share comes right or a company comes right, you don't need to buy it right at the bottom. You can maybe buy it, let's say a rand or $1 higher. Then at least you know the trend is up and you know that the company is doing well. So that is an important lesson to take away. You don't need to have it right at the bottom. I know technical analysts usually like to call it right at the bottom to say, yes, it can go up. Then maybe in a week or two they're wrong. So it's always important to say to yourself, get in, phase yourself in. You don't need to go big and then phase yourself in over time. On the other hand, if you're right at the top and you made good money, you don't need to sell everything. You can maybe sell bits and pieces, lighten up, and then you'll be happy. But I know for traders, and I trade the Aussie and the S&P 500, for me, if I make my money, I walk away and I try again. Because to build a position, and I've built many positions over years, sometimes you can be horribly wrong and you need to work hard to get them back into profit. But for you, if you have a lot of time and you want to trade, take your profit, take the easy money and just walk away and find something else. And here you are, Ferrari. One of my rich clients, I think, asked me about this. I don't know if the guy is rich, but I'm just pulling your leg. But if I look at this chart, very interesting chart. I mean, it sold off from about 246 all the way down to the low of 164. But are we maybe seeing a beautiful double bottom here? Yes, maybe we are. But this double bottom, can you believe it will only come into play above that line? And that is above 210.95. So only then it will maybe give us a proper buy. But there's something else. You can always nibble above this line, because that line turned into a support. So if you do buy it above 177.30, make use of a stop loss of 172. I'll maybe make it a little bit bigger. There you are, 169.40. If you use 169.40, it's about 5-6 off your level. But I like this chart. It looks like there's an early turnaround. It's maybe a stock to accumulate also. But this stock is maybe also telling you that rich guys are starting to buy Ferraris again. And the share can maybe do well. But remember, this is one of those companies that's in a niche market. They've got an executive team that concentrate on their brand. And if they're successful, they make a lot of money. And if they're wrong, and they may be under tough times, the share price sells off nicely. You can maybe buy it close to the bottom again, as it is now. Let us look at master drilling. Now, master drilling is now quite at a very interesting period. I just want to draw this line in. This is the line that I'm watching for quite a long time. When the share price moves above 13, it is positive. When it goes below 13 Rand, it's negative. And we're seeing all the way lower highs. So although this is a mid-cap company, I will say wait for the share to either bottom out, like it did in the past, before you get in to buy it again, or you can buy it above 13, 14. And the reason why I'm showing the share, Annelies asked about it, and she said to me, Frans, sometimes you use horizontal lines to either show good support or bad resistance, or good resistance and bad support. Now the big thing is here, if you look at the chart, this is like almost a let's call it a pivot point or a pendulum. Above it, it's positive, below it, it's negative. So what you will find is sometimes if you look at different charts, the chart will tell you where is the strong points and the weak points. So I just used it as an illustration here. Keep it in mind, so when you look in future for a stock, see if there's not maybe a good or a solid support that you can use, horizontal support, and make use of that. Someone asked about silver coins. Now, I am not an expert on silver coins, so immediately I thought maybe we must look at the silver price, because any silver coin will follow the silver price. So first thing is, buy only maybe the Krugerrand silver, or buy new silver. That is an exchange traded note that you can buy on the market. But if I look at the silver price, I mean, everybody's always saying that you must buy it. I say, remember, silver is like gold, a long-term thing. Unless you buy a gold share or a silver mine, then it is speculative. Otherwise, if you buy the commodity, it's usually for the long term. If I look at silver here, there's a symmetrical triangle right here at the bottom. There you are, after an ugly sell-off. And where will I look at buying this silver price? Only above 2167. I'll make use of a stop loss of 2106. And sorry, I did not see that we're out of time. So hopefully it can break up and take us back all the way to 2297. But let's stick to our stop loss if we're wrong. Thank you for watching the show. We'll chat again, and visit our website www.fransklerk.com for more info.